This is Greg Trotwine with Maritime Reporter TV, and we're very pleased to be joined today by Peter Sand, the Chief Analyst of Xeneta, to discuss recent trends in the container shipping market. Peter, you certainly know better than I that this has been a particularly interesting few years in container shipping. But let's look at what's going on right now, specifically what's happening in the Trans-Pacific trade and why.
Yeah, thanks for bringing me on board, Greg. It's a terrific, exciting market to be looking into every single day, and exactly focusing on Trans-Pacific because that's where things are most crazy right now. Carriers are literally blanking sailings left, right, and center. From Asia into North America. It's like 50% of announced capacity in the second week of October. So it's really, well, it's bloody out there. We see rates coming down 2/3 from previous year, or the peak that we saw earlier in the year. But we still have to realize that they are still double up from where they were pre-pandemic. So it's super crazy out there as carriers try to stem and force spot rates from falling sharply. At the same time, shippers, of course, are also facing troublesome time with lots of the goods already in store and at the inventories. So it's a little bit of a melting pot out there in the logistics.
As you know, I've been covering this market for 30 years. And as I've always said, if I read about the maritime industry in the mainstream media, something has gone terribly wrong. Well, lo and behold, I picked up a copy of the Wall Street Journal the other day, and it covered just that issue, the blank sailings on trade from Asia to North America. What exactly is happening from your point of view?
Well, it goes back 2 years, literally, to the point in time where COVID hit the Western Hemisphere like a sledgehammer. The one strategy that all carriers followed was slashing capacity that they did not see a need for. So right now, it seems as if they are trying. I cannot say they are trying and doing too little, too late, because, well, at the face of it, cutting half in the second week of October, that's a lot. But go back 1 month, that was way too little, because that was when spot rates already started to decline, and by an increasing rate. We have seen rates decline on the main trades out of Asia into North America, into Europe, since the early parts of this year. So it was not a surprise. But all of a sudden, it just escalated. Basically, the carriers lost it. And I guess the shippers that brought in their goods earlier in the year at also elevated rates did know that they were not about to ship any goods coming into this traditionally peak season for container shipping. So obviously it's a little bit of a mess out there right now as carriers scramble to get their act together, and shippers tend to be spoiled right now for offers in the market, especially the spot market that on main trades right now finds itself at approximately half the price of where some of the most recent long-term contracts have been fixed, according to Xeneta data.
This is obviously an interesting time in the world: geopolitical unrest, inflation raging in various places. And the story, though, still remains North American congestion. How do you see the problem today, and what's your projection for the remainder of 2022?
I think it's important always to put things into perspective. So let's start doing that. On the U.S. West Coast, congestion is considerably down, of course, from the peaks of January earlier in the year, just around New Year, but they are still double up again from pre-pandemic levels. So there's definitely still huge workload for the U.S. West Coast ports to work through. But if we move to the east coast of the North American continent, and literally also North Europe and UK, where strikes hit ports of Liverpool and Felixstowe. Well, the workers are just back at their jobs in Felixstowe right now, but it's massively disrupting. And the one thing that happens then is that congestion shoots right up. And we have seen that actually the opposite taking place in the U.S. East Coast for a good 14 days now. since the last week of September. As I recall it, we have seen quite a dramatic slide in congestion off the coast of U.S. East Coast, as it seemed to me, at least that one of the ports being super busy, the port of Newark, New Jersey, just beating the craps out of the San Pedro Bay ports with massive throughput in August. So they are working really hard to get through that say a backlog of work still sitting at the anchorage, while they are also realizing that the pace of volumes coming in is coming down, that the U.S. Federal Reserve is also now shooting left, right, and center at inflation. And that will, of course, also hit consumer demand at some point in time, even though the US dollar right now seems to hit all-time highs against many of the Asian currencies in particular. And that, of course, is softening somewhat of the impact in North America. But I think, as always, Greg, there's tons of stuff to look out for. If it's not a strike, it's a labor dispute still going on the U.S. West Coast, and I think on the East Coast, I think there's more to talk about in a few weeks' time as that develops also, and we get closer to.
Peter, I truly appreciate your time, and I very much look forward to visiting again with you in the future.
Thanks for having me, Greg. Always a pleasure.